Well, Rohit Srivastava joins us this morning for all his expectations on what to expect from the earnings season as the Q3 earning calendar kicks off today. Rohit, thank you so much for your time. Straight off the back, the big ticket IT bellwether TCS expected to announce its Q3 results today. What should investors really be looking out for in the commentary?
So, when it comes to tech results and generally the earnings season is starting on expectations being extremely low. And therefore, there are odds that we will see a slightly better than expected earnings season.
Okay.
However, it's not going to be a flyaway, season either. We are just going to see the similar kind of improved growth numbers like we saw in the September quarter. Um, some segments doing better because of the impact of GST. But if we try to compare that with the market's reaction today morning, I think those are very, very disconnected. There's something very, very different happening at the market level,
Right.
which we may not be able to really reason with what you expect in the earnings.
Right. In fact, markets, like you mentioned, have slipped even further. In fact, both Sensex and Nifty down about half a percentage point or so already in just the first 10 minutes of trading. So some of the factors that could potentially be at play here, Rohit, I don't know, I'm just making an educated guess here, but correct me if I'm wrong here. Of course, Q3 expectations, you're saying, may or may not really be a factor driving the market mood. But some flare up in Iran leading to a spike in crude oil prices could potentially be one of the triggers which is keeping markets a little jittery. Add to that, of course, the gold hitting once again a record high last week, perhaps signaling more investors looking at moving to safer assets instead of equities at a volatile time like this. Do you think these could be some of the issues that could be weighing on investor sentiment right now?
So oil prices, they're not up that much. We're still below
That's
$60.
right.
In fact, you can see that the one of the biggest losing segments of the market on your heat map would end up being energy, which includes Reliance Industries taking a hit. So that's why I said that a lot of the normal reasons may not be what is really affecting our market. What we've been seeing, though, is a consistent loss in momentum over the last several weeks, not just in India, but also in US markets. And the risk is, which one rolls over first. It's very clearly that our market is starting to roll. Now, while we can start guessing what are the reasons behind it, I can tell you one data point that I think will be interesting to your viewers. And that is on the Friday, this Friday, the last trading day, the data that we have. Foreign institutional investors held the largest short position in index futures on record. Okay, so this is a new data point,
Okay.
and this has happened within, barely a percentage point or two from the top. It has never happened before because typically when markets go up, they tend to reduce their shorts and maybe go long a little bit.
Okay.
The only other time where they had a directional short bet on India was COVID. And at that point, SEBI came in the second week of March, I think around the 10th or 12th, and put a ban on further short sales. Now, this time around, it's not COVID, so there's not going to be any ban of that kind, which means they'll continue to be directionally negative on Indian markets. And the reason is what we are trying to guess. It could be something related to the trade deal, it could be something geopolitical or external that we are not able to see. There's this ruling which is now pushed to Wednesday on the US Supreme Court calls, but what will the US do after that is still to be seen. So many, many factors we can keep tracking, but definitely it's impacting Indian markets more than any other market as of now.
Absolutely. In fact, India continuing to perform more poorly as compared to its Asian peers this morning. But Rohit, on the point that you made of foreign investors really going short on India in the futures market right now, of course, the US trade deal apparently continues to be a concern. Is a bigger concern looming that US President Donald Trump may actually make good on his threat of raising tariff on India to 500%? Is that something which seems to be a real worry as well for investors, especially foreign investors who are now not just sitting on the edge, but literally exiting the Indian market?
So that statement was probably the one of the starting points of the decline last week.
Yeah.
And the decline aggravating but we don't know whether that will actually go into force because uh, we've seen the talks go back and forth that yes, there is a deal and it's not happening, and it's all bending on the oil trade and the Russia trade. And to some extent, we can say that is why Reliance also has taken the biggest, weekly hit in a long period of time. So yes, there is some linkage there, but that all adds up with the other idea that as long as we are even at a 50% tariff, the impact on Indian exports is going to be significant going forward, because so far there were a lot of order bookings through the festive season which were done in advance, and possibly it may not show up in numbers yet, but going forward, if we don't resolve this, it is going to show up in our numbers, somewhere. So those are the risks, I think, that people are feeling, that it's taken too long. It should have been resolved by now, and if it's not, then probably the markets. If I just look at the setup on what has happened to the charts in the last 1 week, is that we've weakened to a point where it will look like and generally seasonally we've seen Jan, Feb, March actually be the weaker part of the year, and that means that between now and March we wouldn't expect too much from the market, and they be open to downside risk. So this is a quarter in which you're usually supposed to be a little more cautious, and the news flow is not helping.
Right, of course. But on the domestic front, Rohit, and I'm looking at auto stocks right now, and I'm looking at the weekly performance of auto stocks. In fact, consumer durables largely on Nifty 50. And I'm looking at auto stocks like Tata Motors, which is down 5%, Maruti Suzuki down about 3.5%, M&M down about 3.5%. Now, these three companies, specifically the auto pack, is completely dependent on domestic demand. And the kind of GST fillip which is given to sales of these brands should have potentially gotten investors to buy these stocks at lower valuation when we saw 5 days of losing. But despite that, even this morning, we are seeing a major sell-off in auto stocks. What could be the reason behind that? Because that potentially has very little to do with the India-US trade deal and overall the short position that FIIs are taking on the Indian market.
So like I said, this is a rub-off of something more beneath the surface. For example, even when we go back to the selling we saw in mid and small caps in probably November, December, a lot of it was being reasoned to the excessive, supply of paper that was coming in the market. Now, when those IPO applications actually become active, which is that when the allotments are made, people need to sell stocks and pay for the rest of the amount. And somewhere that selling had to show up, whether it's small caps or large caps. And so initially it was the broad market that sold off. The large caps for not really showing any impact. Now we are beginning to see the impact even on large caps. And that is why otherwise, since you're talking of the auto sector, that was one of the best. Autos, banking, and metals, basically the interest rate sensitives on a 1 year basis, have been the best performing segments of the market. But right now, what we saw on Friday is that even banking broke the 20-day average and gave us a sell signal on our weekly momentum indicators. So despite all the positivity, we actually seeing weakening in these important or best performing sectors.
Rohit, my final question to you, what is likely to happen next? Because if the selling continues, then what are the lows that we are potentially looking at as far as levels on Sensex and Nifty go?
So I'll put it in different time periods. In the very short term, we are already starting to look oversold, but I will keep room for another 200-300 points down from where we are right now before we get our first bounce. Now, markets, when they are weak also, they get very, very sharp rallies. So whenever it does bounce, 300-400 point bounces are normal. However, between now and March, like I said earlier, we anticipate that the bias will be slightly towards weakening, and probably things improve only after March. Between now and then, hopefully we do get something on the trade side, and then we'll also know what the impact of the budget by the month end is going to be. So all of that will then start getting priced in. So yeah, look at it being more of a trading market. Investors may probably increase cash levels again, as and when you get those bounces in the market, so that you can look at opportunities down the line. But there could also be a very, very stock specific approach, because the truth here is that a lot of stocks have fallen so much that some of them are actually attractive on valuations, and that is where we were focused on for the last few months. So it could be a very stock specific market in which the Nifty really doesn't do much. It continues to gyrate up and down with a slight downward bias between now and March. So there may be trading opportunities on the index side. But as investors, we would probably be very stock specific in our approach and keep some cash to be able to buy into good opportunities.
Right, Rohit Srivastava there. Thank you so much for your time this morning and all the input that you've given to investors out there. For investors, this looks like a stock-specific rally is the word coming in from Rohit Srivastava. And of course, for traders, perhaps index could be something that traders would continue to trade in. Well, thank you so much for your time this morning, Rohit.